biggest exchange you run, third largest in terms of equities. And then you have these hordes of and technology at the cutting edge right now. And regulator is also pushing new technologies, and we have new instruments also which are coming into the market. And then you have these hordes of new investors, particularly with COVID and after, coming into the market. How do you think these new investors will now be able to take the vagaries? Because the market is never certain, right? No matter how much technology, how much surveillance you put, and you know it best, how does this whole new set of young, enterprising, ambitious Indians come into this market and start understanding that there are downs which will happen? What is your message to them as the NSE CEO?
We basically, we have just now around 8 crore plus investors, unique investors. Those days we had probably few lakh investors. Today, 8 crore. Investors is around 5 crore households, which is 17% of India's population, household population, directly investing into Indian stock market, which is a very large statement. And it has gone up literally 3 times between 2019 or 2020 early and 2023, literally 3 times in 3 years. No such sort of move happened except in Jan Dhan Aadhaar Mobile, where government forced large number of accounts to happen. Here, it happened pretty much voluntarily. A lot of people came in, and as you said, there are people wanting to make quick buck, because that is the exciting part of markets. That is the, in some ways, hidden situation where people think they will be able to make money, although other people may lose money. So what we try to tell them all is that if you have to trade, then you have to be an expert. What is trading, right? What is investment? Investment is that if you buy a share after study, whether the company or the industry or the economy or the world economy, and buy a share for a company, then stay there for 3, 4, 5 years. Of course, you keep on watching, come out in case it's not working out. But if you have to buy in the morning and sell in the evening and you call yourself investor, then I think you understood the dictionary wrong, right? It's a trading, it's speculation. So we try to tell the people that buying in the morning or selling in the afternoon is for the experts who provide you this kind of liquidity. But you should not be doing that. Similarly, many young investors want to, or young traders want to go into derivatives, because that give you much more leverage and they move fast, right?
In fact, that's something I wanted to ask you about. A recent SEBI study has also found that 9 out of 10 people actually lose money in F&O. And here we are talking about extending trading hours also for F&O. So how does that sort of work out?
No, it's again, both are, in a way, you may think it is connected. But basically, retail investors should not be participating in derivatives. Now, having said that, the longer hours are for the sake that in case the news happens, because today we trade only 6 hours. The rest of the world started automating after us, but they all run 24 hours. Why? Is because news doesn't happen during the market time only. Some news, some war coming out or some earthquake happening, doesn't have to happen between 9:15 and 3:30. It can happen at 8 in the evening, or it can happen in 7 in the evening. So when people want to work on a news, they have no choice. Foreigners have a choice, because Indian products are traded abroad also. So that's where they are able to hedge their products. But we are trying to tell, or some of us are trying to tell that because I want to be in front of the screen every time the market opens or market stays open, market cannot go beyond 6 hours, otherwise I will get tired. So that's why you cannot go about 6 hours. So I say if people are losing money in some ways, idea is to take them out from that market. But strategically, which country will allow its most important asset today? $3.8 trillion is 1 out of every 3 rupees Indians consider as wealth. 1/3 of India's wealth is now represented. And if 18 out of 24 hours, the pricing of that asset is done under some other regulator, we are having a strategic problem, boss. Right? And that's where, as long as possible, if you have ability for the professional traders, the professional hedgers to actually use that information coming in to take positions, that allows the regulators to control the markets better. And people don't have to be there on the screen every moment, because they are not supposed to trade so long for nothing, right?
Talking of news-driven developments and the markets, Ashish, you know, we've recently seen earlier this year and afterwards as well, these huge fluctuations in the Adani pack, for instance, based on some news-driven developments. Now, despite all the technology, despite all the warnings the exchanges introduces, margins and all of that, how do you think this will affect particularly the younger lot which is coming? What is the kind of way out of this to prevent them from these huge swings in the market?
So in a way, the volatility is going to increase across the world because the news flow is happening faster. The actions are happening faster because the technological changes are happening faster. So companies which were very small earlier are becoming large faster. Earlier, a company would take, say, 20 years to reach a large scale. But IT companies reach those scales in probably 10, 15 years. And some other companies are now becoming very large in 2 to 3 years, right? So that's where the news flow is going to be also faster. Volatility is going to be here to stay. And India is connected to the world in a much larger way today. If you take India's exports plus imports, which is what tells you the total trade, is now almost more than one third of our total GDP, right? Almost, right? And that is like large connect to the world. So whatever happens in rest of the world will continue to happen here. And so we may think that how much do we trade? We trade a lot now. Although we import, but we export a lot of services, right? So effectively, everything is connected and those things will continue. The volatility will be fast, higher. And
Yes,
that's where
that